This is Don DeBartolo, a senior commodity broker and market strategist with StoneX in Chicago. I am also the trader behind the Trade Spotlight advisory service. My advisory service is 3 segments all under one advisory. I'll use futures, commodity options, and future spreads to trade the commodity markets. This is Beyond the Spotlight, a video that spotlights 2 or 3 markets that may become trading opportunities for this week. This week begins with Monday, April 4th, 2022. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Okay, I have 3 charts I want to cover for this video. The first being the June 22 Canadian dollar futures contract. And you can see the market traded up to a pretty strong resistance level as of late. All these recent session highs match these highs going back to about the end of January, beginning of February time frame. From there, the market sold off. We traded sideways up until this past month when we've had this rally in all the foreign currencies based on what's going on in Ukraine. But now I think it's time to set up a trade to the downside in the Canadian dollar, seeing the market hit this resistance level and struggle to break through. We did create a new 12-month contract high that was done just last week on the 30th of March at 89.43.5. But you see the market closed right below this red horizontal line, which will be used as a stop loss for any short positions. Ideally, we use the momentum entry technique and short the contract on a break of this contract low that you see in the blue ellipse there. That contract low is 79.72.5 from April 1st, so you can put a sell stop just below that low to sell the contract on a breakout. Looking at some of our indicators, the MACD indicator looks like it's starting to turn over, but it is not quite bearish just yet. However, my stochastics indicator, this is a momentum indicator, is pointed downward. Same goes for the GBE turning point indicator. It looks like the market's turning over. We do have some moving averages pointed up, mostly the 20-day moving average. The others are slightly up, but turning neutral. So the market can get choppy up in this level here. But ideally, because the momentum is down, we'll break this low and we'll continue lower. I don't want to put a long-term target on it. I think we get back to the top of this range here. So to give you a price, it's about the 79.15 or so price level. That'll be a target. So this will be a quick downside trade. We can have this sell stop working good till cancel to anticipate that breakout with the stop just above these highs. So that would be about 80.21, 22.23, somewhere in there. The second chart is of the May 22 milk contract. Now, milk isn't one of those popular commodity markets. There is decent enough trading volume though that we can trade this contract. You just expect some slippage perhaps if we're using stop orders. Definitely don't want to use a market order in the milk market. But look what we have here. This is an inverted head and shoulders formation. The left shoulder is that March 8th high, 24.75. You got the head of formation, the 12-month contract high. That is 25.55 from March 24th. And then this right shoulder was just put in at 24.96 from April 1st. I wouldn't mind seeing another bounce up to this level, around that 25 price level, and then stalling out there once again and then turning over. That might help some of our indicators, because you look at the MACD, we've got a neutral trend. Now that makes sense. We've been range bound. After this big rally, we've been pretty range bound between 23.5 and 25.5 over the last month. Then you look at the stochastic indicator, it's showing flat momentum. And same for the GB turning point indicator, it's actually slightly up here. So before we get short this contract, and it would be below this lower trend line, I want to see one more bounce back again towards that 25 price level. If that holds, that's where stop loss can be placed for a short entry in the March 22 milk. And the third final chart today, let's look at a new market. This is Bitcoin. This is the May 22 Bitcoin futures contract. And I've been tracking the Bitcoin contract to track volume and open interest. You have to trade the front month contract. That right now is actually April. That doesn't expire until the 29th of April. And open interest for the full size contract is 4,000. I'm sorry, the total volume today is 4,999 contracts. Not bad. Open interest 8,911 contracts. But there's a micro contract that actually traded 9,475 times today with an open interest of 11,279 contracts. And that's the contract that I would trade, although this is the full-size Bitcoin chart that I'm showing you from bar chart. Reason being the margin. The initial margin for the Bitcoin futures contract currently from the CME is 81,928, and that mini Bitcoin contract has an initial margin of $1,639. So that's the contract that I want to trade. I am just showing the full-size Bitcoin chart here. And what you can see is I have a lower trend line tracking this rally that we just experienced in the contract when the market got back above the 40,000 level, approached the 50,000 level, created a new recent high here. That high was 48,615 on March 28th. But I believe we're starting to roll over in this contract once again. So I have that lower trend line here, looking for a break below there, a break below this low in that blue ellipse. That low is 44,460. I do believe, though, we might get a bounce off that trend line first, because you look at some of these indicators, the trend, this is the MACD, the trend looks like it may be turning down. Momentum is down. The GB turning point indicator is kind of in the middle of the range. So I'm just wondering if there might be a little bit of bounce first before the rollover and sell-off. So if we were to trade this now, we'd have to trade the April contract, but if we give it a week or two, we can trade the May contract. So I'll keep this chart on the radar here and put out a trade recommendation, our first one in the Bitcoin contract for when I feel like it's time to short this contract. Here's a look at what the Trade Spotlight Advisory Service looks like. It's an email service, so you'll get this type of email directly into your inbox. This is the future segment. You get a write-up of the trade, the entry order, risk parameters, stop losses and targets, so you know the risk-reward parameters for each trade. You're welcome to adjust them to fit your own trading style, and a chart that you can click to enlarge. If you're not following the Trade Spotlight, I encourage you to do so. Just go to the danielstrading.com webpage, click on the Advisories tab, and then our Technical Analysis. You'll find Trade Spotlight where you can review recent posts and click the orange button to subscribe. It's free to clients and non-clients at this time, but if you want the hands-on service of me executing trades for you, talking through these trades, helping you manage these trades, I do encourage you to contact me to open an account. Here is all of my contact information. You can reach me by my phones, work, cell, or feel free to drop me an email. Thank you for taking the time to watch and listen, and happy trading.